Good morning, I'm Chris Beach, and welcome to Charting the Markets on IG Live. And it's turning into a bit of a risk-off morning after yet more poor economic data from China has really put the cat amongst the pigeons. Retail sales, industrial production figures really quite disappointing overnight. And despite one loosening of policy measures by the People's Bank of China, it looks like markets are headed lower once again. And that is certainly knocking back European markets in early trading this morning after what was a fairly disappointing day yesterday as well for risk appetite. Japanese GDP did grow by more than expected quarter on quarter, but that really has not been enough to lift the mood. And turning to the UK, interesting situation where we have signs of a rise in unemployment rate, but at the same time, UK wages have grown at their fastest pace on record at 7.8% between May and June. So that has given the pound a bit of a mixed reception this morning as people are concerned that this will then push Bank of England into tightening rates even more and possibly pushing the UK economy towards recession. Starting with the indices, beginning with FTSE 100 currently trading at 74.15. This is quite an impressive move to the downside in early trading this morning, down 1.4%, taking us to its lowest level now since the middle of July, and really sealing, I think, the bearish outlook on this index, which has been arguably developing over the past two sessions. On Monday, we did try to rally, but were unable to hold it. We're certainly weak in early trading, and now we've dropped to its level we've not seen since the middle of July, and that 7,400 level coming firmly into play. We now have arguably those lower highs in place for the middle of August at 7,600. So this means we could see an index move all the way back to these lows down at 72.55. That's the early July lows, and that's beginning to make life a lot more interesting for the index in terms of the outlook for the rest of the year, because certainly we've now given back almost all the gains made since the beginning of the year. In fact, we are now almost negative on the year. And a move back to those, well, the March lows around 7,300 and then down towards 72.35, and the lows from July are certainly the next thing to keep in mind. It does look as if we do have quite a negative outlook for this index, with no sign of any recovery yet in play for the FTSE 100. Turning to the DAX, and after yesterday's attempt to recover, we're seeing this head lower once again. So pressure coming through on European markets as well, although not quite as much as for the FTSE 100. This index doing its best still to hold above 15,700, that vital support level, with no sign of it breaking just yet. But certainly if this continues in this current fashion, we could be seeing a test of that level within fairly short order. Below that takes us down to 15,500 and the lows from the beginning of July, and then on to that rising 200-day moving average, currently 15,382. We've not touched the 200-day moving average this year. We were above it, we rallied above it back in November of last year, and haven't returned to it since then. So in some cases, perhaps this is a natural progression that the index, having enjoyed a very strong performance the first half of the year, is now seeing some kind of short-term pullbacks or short-term retracement without changing the overall trend. But for those who've been grimly watching the DAX since April, the fact that this consolidation is giving way to a move lower, or could well be, will certainly be quite frustrating, to say the least. One of the strong performers of the year, just seeing its gains fizzle out once again, and being left in the dust by other stronger markets, most notably, of course, the Nasdaq in the US. And for the index to give that more bullish view, we'd need to see it back above that 16,000 level, above that 50-day moving average. That's been the case now for about 2 weeks and doesn't change this morning, really. Until that happens, this is in consolidation mode at best, and with price action currently leaning fairly negative, it could be that we're headed lower once again. If we then go on to look at the Dow, this is down now at its lowest level in a couple of days, back to where it was on Friday after it tended to rebound. Still above 35,000 though, so not all is lost for this index, and still more in consolidation mode than anything else. It's been quite volatile, I guess. We said that's over egg it, but certainly more volatile than we've seen for a while, in the sense that we have seen this is the hourly chart since the beginning of August. Swinging around essentially in a 500-point range without any sign of any conclusive move in either direction. So we're finding ourselves back at the bottom end of the range, back into sort of 35,100, which is where the buyers have determinedly stepped in over the month so far. But in the flip side of that, of course, is that we've not seen it be able to hold those gains it's made since then. So while it then rallies, say, 400 points, it can't hold on to that. And I think last week, with that CPI reading was the classic example, accentuated by the data. Big rally, straight back down again into this support zone. So if 35,100 is broken, if we go back below 35,000 itself, that clearly hands initiative to the sellers, and is something that I think bears will be delighted to see, at least in the short term, because for the moment it is still broadly in an uptrend. We have seen quite an impressive recovery for this index since those lows in May, down at 32,500. And we're yet, of course, to retest the 50-day moving average. That's another thing perhaps we might see in the short term if this index does begin to move lower in a more substantial fashion. Looking at FX markets, and it was another tough day for euro dollar yesterday. No sign of any recovery of the ground we lost last week. Last week we looked as if we were beginning to show signs of a more solid move to the upside, back above 110, and that now has sort of evaporated. You've now seen it move back towards 109 and potentially even lower, I think, in the short term, which then calls into question whether we can see a move back to these lows from the beginning of July, or then down towards 106.70 and the lows from May. With inflation data in the US rather looking stronger, it is now the case that people are expecting the Fed to have to hike more strongly than previously, and that then puts pressure on other currencies. With euro dollar also, we've got the concern with the ECB that they can't really continue to hike rates much more. So that's really, after months and months where the euro has held sway over the dollar, it's now the case that we're seeing quite a bit of a reversal here. Maybe there's a change of trend here for the second half of the year, but at the moment it's still very much in an uptrend. It's just that it hasn't got the strength to rally. And of course, the broader risk-off warning following that China data won't help matters either. The pound did do its best to try and recover, and we recovered off the 100-day moving average yesterday. For the moment, however, we've not seen much chance of further upside in the short term. I think this is the key thing to bear in mind, that the price has actually remained fairly static despite a slightly more optimistic view of the UK economy. The problem is, again, that stronger dollar and US inflation. Last week was the PPI reading in the US on Friday, really sending a message that actually they expected stronger inflation. And indeed, that might force the Fed into hiking rates yet further. So at the moment, this is the key thing to bear in mind, that the price is at least holding 126.70. It just hasn't been able to gain much more upside in the short term. For that to happen, for a more bullish view to emerge, we need to see it back above 127.80, and then we could say perhaps the low is in place for the time being. Otherwise, additional declines take us on to 123.60, perhaps, if that was a more dramatic view in the medium term. If we get some more, say, poor UK data. Don't forget it's CPI tomorrow. So if we do have stronger price data for the UK tomorrow, perhaps that will give the pound the strength it's looking for. And then finally, dollar yen, of course, sitting at its highest level now since November of last year. Really a very impressive recovery for this. And despite talk of an intervention by the Japanese Ministry of Finance, that has yet to be seen. The key with those interventions is they're more worried about the pace of how it gets there rather than the actual level. And I think the concern was back in June that maybe the price had moved too far too fast, and it was due some kind of pullback, certainly from a Japanese perspective. Perhaps the impact on Japanese companies was too dramatic. So that's why they talked about intervention without actually doing it. It has, of course, come back in a very short space of time. So there is still the possibility that they might intervene. So if you are looking at this, or certainly if you are long already, so if you're looking at going long, there is the risk we could see some volatility around that. So do be prepared for that to happen. Now, the broader view, of course, leaves us still with a target around about 151.90 and the highs from late October. Or bearish view, short term, of course, back below 144.90, and maybe we get another pullback towards the 50-day. And below that is the kind of bearish view I think we'd be looking for in the medium term. Finally, turning to commodity markets, and of course, there's no respite for gold. We thought maybe we had tiny signs of a recovery yesterday, but once again, they fizzled out and turned back into more downside pressure. Back at the 200-day moving average here for gold for the first time since December of last year. So again, uptrend more or less, but certainly it's taken quite an impressive knock over the past few days, and there's no sign that it will really start to turn around in any sustained fashion. For the price to actually recover, actually to give a more bullish view, we should say, we need to see it back above 1930. Otherwise, I think we're going to see sellers begin to take this one and run with it, essentially. And that's with the dollar strengthening as well. So the potential here is for that downside movement to take us down towards 1806 and the lows we've not seen since the beginning of March. Otherwise, it's really tough to muster a bullish view for gold while it remains below this 1930 support level. That was the big one. It held in May and into June, and it was broken briefly in July, and then we're back up again. But the fact we're back below it and we're at the 200-day does send a fairly negative message in the short term. And then finally, crude oil, beginning to see some signs of a pullback here. Nothing dramatic, nothing too dramatic, certainly. $81, perhaps a potential support level. This is more of a retracement rather than full-on pullback at the moment, at least, which, given the scale of the move from the June lows, is not surprising. In the near term, back below 80, and you might start to view the possibility of a move to the 200-day as something that could loom fairly large. Otherwise, the next thing to be would be 84 if it does recover in the short term, and beyond that. Looking beyond that, down towards 89 is the big one to watch in the medium term if we do see further recovery in oil demand, which is something that has happened. So $89 November lows, sorry, the mid-November highs, and then onto the early November highs up at $93 a barrel for crude oil. So at the moment, bulls still hold sway more or less, but it's quite coming under pressure quite a bit. Looking at the rest of the day, we've got a US retail sales at 130 and Canadian CPI, so that does promise perhaps some activity on that front after what was a fairly empty day yesterday. Expecting a weaker open though for the Dow, expected to open the day about 150 points lower from yesterday's close. That's it for me. Thank you for joining us. We'll be back as normal tomorrow at 10:30.